Hello, Siegfried here from Cloud-Based Services Accountants. A lot of our clients are unsure how to make provision for income tax payable, and sometimes they estimate or guess a certain percentage and then put that percentage of income aside in a separate bank account to make provision for future income tax payable. So if you're using Xero, then guessing a percentage is not the best way to estimate your income tax payable. With this video, I will show you how to calculate your income tax payable at any stage during the year with quite a high level of confidence or accuracy. An obvious prerequisite for this method explained in this video is that you must use Xero as a bookkeeping platform. So let me show you how it's done.
Okay, so as usual, we make use of the Xero demo company to explain how to calculate your tax liability. So the first thing I would advise is that make sure before you run basically any report in Xero, make sure that you reconcile all your items. I'm not going to do it right now, but make sure to get an accurate figure that you reconcile all your transactions first. Then the next step is to go to your profit and loss report. You will get it under accounting and either reports. If it's not reflected here, go to reports and you will find a profit and loss report in there. In this instance, there's the bookmark here. I'm just going to click on profit and loss there. So the report dates that we're going to select is, you can either select the current financial year, this financial year, or you can click the year to date. So either one of those. Let's go for year to date and we update that. So the only figure we are interested in now is your net profit, because that will be the amount that you will be taxed on. And for this calculation purpose, we treat this, in this scenario, we treat it as if there's only one shareholder of this. Let's say this is a company, and the full profit of the company or the net profit at year end will be allocated to the shareholder as shareholder salary, and the shareholder or you will then, in your personal capacity, will then pay tax on that, just to make the calculation a bit easier for yourself. Okay, so now we've got an amount of 61,808. So that's the amount. Net profit, that's now at a point in time. So this is now May, a point in time, and that's there. Now, how much should I make provision for to pay my tax and provisional tax in the future? And let me show you how to calculate that. So I'm just copying that figure, or you can just retype it. I'm copying it. And the next step is to go to Google or whatever search engine you use and type in something to the effect of IAD tax on annual calculator, New Zealand, do that. And then you'll see work out tax on your yearly income. So there's the link. You just click on that link and it will take you to that page. I'll also insert a link to this page below this video, and but it might change in the future. But let's use it for the current version of it. Just click next, and this tax calculation is for an individual. So remember, individual, and for the tax year is now whatever the current tax year is, and then also the amount, and that's the amount that we have copied. So great, and next. So the tax on that 61,808 is $11,562.40. Okay, so what do we do with that now? So that we know that's the tax payable, but it is actually more than that, because there will also most probably be provisional tax payable. Now let me show you. I've created a spreadsheet where we can basically calculate the provisional tax as well. And I'll also place a link below this video to this spreadsheet that I've created for this purpose. So I've created a spreadsheet, and you basically can only enter the information in these three rows in this column. So you can specify the tax year. Now the current tax year is 2023, and the current year's income tax is 11,562. And now if you've already paid provisional tax, so sometimes the previous year you've already started paying provisional tax for your 2023 year, insert the amount that you've already paid as provisional tax. So because that will impact the current year's tax payable, because you get credit for that. So let's say you've already paid $5,000 provisional tax for the 2023 year, it will be deducted from that. So and they call this your terminal tax. That's the balance that's outstanding. Now, if you notice, you will notice that this tax is only payable a full year after the end of this financial year. So you get a full year's time extension before it's required to be paid. So in this instance, you are also liable for provisional tax for the next year, for the 2024 year. So if your tax payable here is more than $5,000, then automatically you'll be liable to pay provisional tax for the following year, just to make provision. If you work for somebody else and you earn a PAYE salary, immediately, every time when you get paid weekly, fortnightly, or monthly, the PAYE will be deducted. As a business person, there will be no tax deducted from drawings or whatever you take during the course of the period. So this is the way that ID force you to make provision for your tax payable in the following year. Now, what you'll see here, you'll see that the dates here. The first date is the 28th of August 2023. Second date is the 15th January 2024. Then the 7th of April 2024, and then 7th of May 2024. So it might be confusing. But remember that you get a full year's extension of time to pay this 2023 tax. But now in the 2024 year, and that's now from 1 April 2023, you have to start making provision for your 2024 tax. And that's why your first provisional tax date for your 2024 tax is the 28th of August. And the amount payable based on this income tax of your 2023 year plus 5% divided by 3 is 4046. So this is the first payment that you will have to make provision in your cash flow to make sure you've got that money available on 28th of August 2023. Then the next one will be on the 15th of January 2024. So that's still 2024 provisional tax payable. And then the next payment will be on the 7th of April 2024. But that's for actually this tax for the end of 2023. And then the final provisional tax payment will be the 7th of May 2024. So you can see there's the dates as they come along, following from the 28th of August 2023 through to the end of May 2024. So it's very important to start making provision. First of all, ensure that you've got that money available for your current year's tax payable or income tax payable. But you also have to start making provision in your cash flow for starting to pay your 2024 provisional tax. It's not a double tax. This is two separate different tax years. This is a 2023 year and that one is a 2024 year's tax. But the reality is that you will have to start paying tax. This is provisional tax and that's the first payment. So what I would suggest is that you total all these amounts and set that aside. And as you progress through the year, top it up, that you make sure that you have got these funds available to pay at these dates. Obviously, sometimes it might not be practical to take that out of your cash flow, and things might change, let's say drastically, and through the year, your income might get less because you've had more expenses or whatever. Your net income will be less because you had lots of additional expenses and so on. But this will give you an indication at any time. You can obviously change that figure. So let's say after your tax calculation, it will now suddenly only be $8,000. That will impact that. So then if you've already set those funds aside, you can shift some of the funds back into your operational accounts or so. So hopefully this makes sense. And if you've got questions, don't hesitate to get in touch with us. Our details below. And yeah, hope this helps. Cheers.